This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and leverage is spelled Leverj.io, and trade the future of crypto today.
Yeah, boy!
My guest today is Craig McGregor. Craig is the founder of Taksoshi, a SaaS product that cuts through the complexity of calculating tax obligations for anyone trading or mining cryptocurrency. And Craig is also the co-founder of Navcoin. Craig is here today to talk about crypto tax. Yes, it's a big subject. It's not everyone's favorite subject, and we should point out that Taksoshi it's a New Zealand product. So I think it's designed for New Zealand citizens working under the New Zealand tax system. But I think, having said that, a lot of what we talk about today, well, in general terms, it will apply to anyone around the world. Welcome to the show, Craig.
Hi, Andy. Thanks for having me on.
So just before we get into the nitty-gritty tax stuff, why don't you just introduce yourself, and let's just have a quick backstory on yourself and how you got into blockchain.
Sure. So I've been sort of involved in blockchain since about 2013. I'm a software engineer by trade, sort of have been doing stuff in the web development space for over a decade now. I had heard of Bitcoin and blockchain and stuff sort of peripherally before 2013, but it was really when the whole sort of bull run happened around December 2013 into 14 that sort of made me prick up my ears and start to take notice of it in a more major way and take it a bit more seriously, as happens with these sort of news cycles, they get people interested and involved. And when I started looking at the tech, the whole concept of these decentralized, trustless networks really interested me from an intellectual perspective. So I started investigating how they work, and from like a software engineering perspective, which was really interesting. And through that sort of experience, I was trying to find some projects to contribute to, and the new things that were sort of happening in 2014 was proof of stake was like a new competitor on compared to proof of work, and also privacy coins were starting to become really popular. And in both of those instances, I wanted to get involved in something that was sort of on those leading edges of where I thought the tech was going. So I managed to find a project that was just in its early sort of startup stages called Navcoin, which was both proof of stake and privacy oriented. And I got involved with a group of people online to launch that right back in 2014. So that's how I got involved in blockchain. And
great and because most of what we talk about today, Craig, is going to be on Taksoshi and crypto tax. But so just before we get there, well, let's just use this opportunity to cover off Navcoin. So this has been going for some time now, by the sound of it. So just really quickly, what is Navcoin? What is the state of the Navcoin ecosystem today, and where are you heading? What are the end goals?
Yeah, well, as I said, sort of Navcoin started out as a proof of stake privacy coin. Those are the sort of major things that it was focused on. It's got fast block time, so like 30 seconds. Transactions are validated, in 30 seconds, and the fees are really low because it's proof of stake. So that was sort of what we started out with, the focus on: fast, cheap, private payments, wallets that are kind of easy to use, and a bit more care put into the sort of UI and the user experience, because that was another big thing that we saw was sort of lacking in the early days. Like a lot of the technology was very clunky and quite sort of difficult to use. But since then, it's really grown. It's a project which we never ran an ICO, so it was just fair mined and publicly launched, like the same as how Bitcoin started out, really. So it's a totally community run project, fully open source, and anyone can sort of get involved in the development of it. And we've kind of really run with those features as well. Like we've developed what we call the community fund, which is a decentralized funding system where a percentage of the miners' reward goes into like a fund online on the blockchain, and those funds can be voted on by miners in ways that they're used. We launched that maybe 2.5 years ago, and so ever since then we've been running as a fully autonomous DAO with the network voting on which projects that have been submitted to the DAO get funding from the network, basically. So that's been a really exciting thing. And through that, we've built a whole lot of stuff. Like we've built cold staking, and we've built staking pools, so you don't even need to run your own nodes. We've turned the DAO into slightly more than just about funding. We've got like a consultation method, which you can do sort of votes that aren't necessarily tied directly to funding proposals. You can actually vote on all the consensus parameters of Navcoin, all decentralized on the blockchain. We've just launched a new privacy protocol on the blockchain, which is a thing called BLSCT, which is BLS signatures and confidential transactions, which is some really tried and true cryptographic methods of hiding, obscuring the sender and receiver as well as the amounts. We're about to launch a WNAV, which is like a wrapped NAV token, so that we can start to interact with DeFi platforms. I don't know. There's just so much going on. It's actually crazy. There's almost too much to keep track of. It's a really exciting project, and it's got a lot going on, and a really strong community of people that are just trying to build cool tech, basically.
Fantastic. Okay, well, Navcoin, there you go. So look, a link in the show notes will take you to the Navcoin website, but that is just navcoin.org. And, if you want to learn more, go to the website. So, Craig, let's switch gears to the good stuff. Let's talk tax. Now, to begin with, I think we've established that you've obviously been in the blockchain ecosystem for a long time now, and so you understand it from a technical point of view. And I guess the reason I say that is because as a way of leading into this tax discussion, I believe you have been consulting to the IRD, the Inland Revenue Department here in New Zealand, or I don't want to put a name on it. I don't know if it's consulting or in discussions or whatever it is. So I'll leave you to explain that. So firstly, if you could explain your relationship with the Inland Revenue Department here, and then use that as an introduction. I wonder if you could perhaps snapshot for us the current IRD stance on crypto tax in New Zealand as simply as you can.
Yeah, sure. Well, my relationship with the IRD is not what I would call consulting, really. But from being involved in crypto for so long, I ran my own blockchain software and development lab, basically, using some of the capital that I'd made through trading and mining Bitcoin and other currencies. So through that process, I had to be very put my best foot forward with the IRD and with the bank and all that kind of stuff to make sure everyone was on board with where this money was coming from. And, that was back in 2017. So I've had more conversations with them around how I should approach that. I almost feel like I was a bit of a, canary down the mine in a way. One of the first people probably in the country that paid a decent chunk of their income.
You were the guinea pig. You were the guinea pig.
The guinea pig. Sorry, not the canary down the mine, but
the test case, the proof of concept. Yeah,
totally. And I was also involved with the tax working group that made some submissions to the IRD before they put out this guidance as a technical advisor. So maybe that's where the idea of me consulting with the IRD comes from. But no, it was with the tax working group, and then my other discussions have really just been to do with my own position, and then those conversations evolved into, well, how getting them across what I was doing with Taksoshi and sort of talking with them about, whether they were happy with the methods that we were using. And of course, Taksoshi is a private business. The IRD is a government entity, so they're not able to specifically rubber stamp private businesses or endorse them and stuff like that. So yeah, it's a tricky sort of relationship, as is with anyone, but we have worked with them. Well, it's more that they've consulted to us, I guess. They've given us advice on what we're doing with Taksoshi and how that fits into the way they interpret their guidance to make sure that we've got it right,
And so, if we're talking about the official guidance that comes from the IRD here in New Zealand, and so I'll put a link to this in the show notes, but they have a section within the IRD website now that is, it's not super comprehensive, but it is reasonably comprehensive. So I'm looking at it now. I don't know if you just do you want to talk through it just simply, Craig, in terms of, let's just use the example of just an average everyday retail investor. Let's say they have been maybe just even dollar cost averaging into, say, some Bitcoin and some Ethereum over the last 18 months or so. If they are doing that from New Zealand, they're probably using a service like Easy Crypto. There are a number of other exchanges that they could use as well. But so what would be the tax obligations for this person, and how is the IRD viewing their activity?
Yeah, well, I just need to caveat everything with the fact that I'm a software engineer and not a chartered accountant, so I can't explicitly give, tax advice. But I can I'm definitely well, well versed in the guidance. And the interesting thing is that there's been no new legislation created. All the guidance that's been put out is really interpretation of existing property tax legislation. It can be a little bit subjective and a bit of a moving sand, and that's going to be the case as decisions are made and case law comes into effect as things start to shape how this guidance is interpreted. But for the most part, the simplest thing to remember is that the taxable event is created when cryptocurrency is sold. Now, a lot of people misinterpret that to mean, I only have to pay tax when I cash back out to New Zealand dollars. The way that the IRD guidance is worded is that the sale of cryptocurrency includes when you sell one cryptocurrency for another. So in your example that you're talking about, it would depend whether they were just dollar cost averaging directly from NZD into Bitcoin and Ethereum. If they were just purchasing those, automatically with New Zealand dollars, then effectively there's no tax liability because all that they've done is purchasing, right? And the taxable event would be when they sell it.
Right. So that's actually quite an important distinction, though, Craig. So what you're saying is if you are, because there will be a number of people who here in New Zealand, and I'm talking the kind of people that use services like Easy Crypto, a lot of those people are simply buying and holding, right? So if you are just buying and holding, you're saying that, yeah, there's no taxable event. The only taxable event comes when, and again, there'll be a lot of people that are doing this as well, that are doing trading, particularly, trading between, going from Bitcoin to altcoins, and then from altcoin to altcoin to altcoin. And before you know it, you've made a number of trades, right?
Yeah, exactly. So either even if you just buy Bitcoin and then sell it back for NZD, obviously that's a taxable event too, or when you sell that Bitcoin for other cryptocurrencies. So if you're doing something like, dollar cost averaging on Easy Crypto, and then you take those Bitcoin and send them to Binance, and then, a week or sometime after you've purchased them, you sell those Bitcoins for other coins, then that creates a taxable event, and you need to calculate how much the Bitcoin that you just sold for other altcoins has gone up or down in value since when you bought it from Easy Crypto or wherever you purchased it from, and report that as part of your tax as income, basically.
That's right. So look, we're not, as Craig has pointed out, he's not an accountant, so he's not going to give anyone tax advice here, and I'm even less inclined to give tax advice. But I think that the key point that you need to know, if you're listening to this and you have some crypto, as Craig has said, if you've made a trade that is essentially going from a crypto asset to another crypto asset, that is a taxable event. So that's all you need to know, and it's kind of up to you how you resolve this with the IRD. But luckily enough, Craig has actually built one possible solution for this. So I guess this is our lead-in to talk about Taksoshi, Craig. And so first of all, what is Taksoshi, and what's the origin story here?
Taxoshi is a cryptocurrency tax calculating platform, effectively, where we can calculate, well, it doesn't calculate your tax specifically, but it calculates your earnings position, which then become part of your tax picture, So we can take your trading history from various exchanges, and also we support mining as well of Navcoin, Bitcoin, and Ethereum. So if you're doing any of those, we can put those all together and then run it through our system and come out with, a position, earnings position for the tax year that is in line with the way that the IRD has guided people to calculate it. So, that's the sort of crux of the product. In terms of where it came from, well, the name is obvious. The name is obviously a play on Satoshi Nakamoto and tax. So, we want to be that sort of field leader of this part of the blockchain ecosystem. And where it came from a sort of needs perspective, as I explained before, I started running some of my companies on the money which I had made through crypto, and had to figure out my own tax position effectively. This was before we had even this comprehensive guidance that we've got now. So, it was really figured out through discussions directly with the IRD and the limited amount of stuff that they had put out. And, for me, it became so complicated really quickly that I had to write some scripts, some computer code to figure it out for me, so I could just submit my own tax return. And then I had a few friends asking, "Oh, hey, can I use those calculation scripts that you put together?" A couple of my programming friends, and it sort of gave me the idea that, hey, maybe there's a need for this out in the market, and basically turned that original idea and that original piece of code, scaffolded out into like a software as a service platform that other people can use for, the fraction of a price that would cost to get an accountant to do all this type of stuff manually.
That's right, and again, that's such a good point, Craig, because you can imagine if, let's say, you're someone who has, been in crypto for a few years now, and you're an altcoin trader, then, you can imagine what a nightmare that would be for your average Kiwi accountant if altcoin trader Joe Bloggs turned up with all these CSV files from Binance, Bittrex, Dasset, Easy Crypto, or been doing some mining as well. And I mean, I don't think the average Kiwi accountant would know that is going to be a nightmare for them to untangle. So effectively, what you've done is kind of solved that problem, and it's just an easy automated process. So, and what I also like is, you can talk to this, but so the list of exchanges that Taksoshi supports, just reading off here, you've got Easy Crypto, Vimba, Bittrex, Binance, Poloniex, Independent Reserve, Local Bitcoins, Kraken, and Bitstamp, and then support for mining some cryptocurrencies as well. So, and I'm just going to add at this point that, Craig has been nice enough to add a discount code in Taksoshi. So if you do decide to use the Taksoshi crypto tax service, when you go to the payment section, it'll prompt you to add a discount code. And if you add the code Brave New Coin, just all lowercase as one word, Brave New Coin, it's on the payment page, that discount code will give you 10% off. Very cool. So yeah, as I say, if you do want to use the service, use Brave New Coin discount code, 10% off. Can't do better than that. Well, let's talk through the process then. So what does someone do? So the first step that a trader needs to do is they need to be able to extract their trade history from each particular crypto exchange that they've used, right? So how do they do that, and then what do they do with that?
Yeah, totally. So we've got some FAQs on the website around how to do it specifically for each platform, because each one's different. One of the things as well is that it is a bit difficult to keep up with them because these websites can change their user interface all the time. Effectively, what you need to get from each of the exchanges is your order history. So it's not really concerned with the deposits or withdrawals from your account. It's all about the order history or trade history, depending on how they word it. Different websites will allow you to do different things when it comes to how you can extract that data. So, Bittrex, for example, gives it to you on the calendar year, whereas Binance, you can select a date range. So, for New Zealand, most people, their tax year goes from the 1st of April to the 31st of March for the next year. So if it's in terms of Bittrex, like we actually need to download two trading history files so that we capture the whole New Zealand tax year. So yeah, it's a little bit different for each one, but effectively grab those trading history files. And if you have any problem finding them, just have a check of the FAQ of the website and it talks through how to use it. And then once you've got all of your files for a particular tax year, you can go through our wizard process. Now, the wizard can actually handle multiple tax years. So another way to do it is just to extract your entire trading history for each exchange. And then we will detect when you go through the process, which tax years you have available from the data that we see, So it's really pretty straightforward. There's only a few steps. You just get those files and then upload them to our platform. We'll give you a bit of if you're mining any of the currencies, there's a step for that too, where you just put in the address of where your mining rewards end up. And we actually look at the block explorers and extract the transactions directly from the blockchain and calculate, add them into the calculation. And yeah, we give you a bit of a review step so you can sort of see that it makes sense. And it looks like we captured all the data, and then pick which tax years you want to report on from what we can see in the data, and then pay for your reports, and it's job done, really. It's only a few sort of steps. Yeah.
That's right, Craig, and I think it is, it's such a good idea and such a good product that you've built here, because as I was talking about before, if you turn up at your accountants with all these random CSV files from all these different exchanges, they're probably going to be pleased, because it's going to take them hours and hours and hours to sort through that, so they're going to charge you a lot of money. But if you can just turn up with the data that has already been processed by your product, that's probably a much better idea, and you're going to save your accountant a headache there. And I see that the IRD estimates that there are between 25,000 and 100,000 people who have a tax obligation on their crypto assets in New Zealand. So I guess that, that sounds about right. Another way of saying that is that's just how many crypto holders are in New Zealand. Sounds about right. How many of, I know you're just guessing here, Craig, but do you have any sort of sense, any sort of feel for how many crypto holders have not yet declared their crypto trades?
I would say the majority of them, to be honest. When I talk to accountants about Taksoshi and crypto tax, for the most part, they seem to have very few customers who are in need of this service or are requesting their crypto taxes. So, if there's 100,000 people, I can't imagine that the majority of them are figuring it out for themselves, because it is very complicated. As simple as that wizard process is, to talk through, there's a lot going on in the background there. We talked about how there's a tax position created when you sell your cryptocurrency, but that has to be calculated in New Zealand dollars at the time of the trade. So even if you've sold some Ethereum for some Litecoin, that profit and loss needs to be calculated in NZD. So you're having to do currency conversions. You're having to use some kind of inventory tracking method. The two ones that the IRD accept at the moment are first in, first out, or weighted average. So, you're having to do a lot of work. Even once you get to a dozen or, a couple dozen trades, it can be a real nightmare to try and do on paper. So the fact that accountants aren't really seeing yet a huge amount of influx of their customers or people requesting, crypto taxes, combined with the fact of how hard it is to do on paper, I'd say a lot of people need to sort this out. And the IRD gets the fact that it's difficult and that the guidance is relatively new, and that there's only just starting to come on online platforms like Taksoshi that can actually help people figure this out and comply with what they're asking to do in a reasonable manner. So, the IRD has said that they want people to also declare their crypto tax retrospectively through a voluntary submission process, where if you haven't reported it before, you can get up to date so that moving forward, it's all squared away. But yeah, it's hard to say. That's just my sort of gut feeling. The other thing I'd like to say, is just quickly about the conversations with the accountants, that a lot of these people are stoked to see something like Taksoshi come out, because, you said before that accountants would be pleased that you'd come to them and they could earn a lot of money. But the reality is that most accountants don't really want to just make money. They want to provide you good value for the money that you're giving them, So they're not really interested in doing all of this manual work. They'd rather be spending their time on providing high level tax advice and structuring and things like this that can actually help you get ahead and help you utilize, get in a good position with your cryptocurrency earnings. And yeah, they're actually really stoked to see something like this, where they go, that's such a relief. I can just use this platform, or my customer can come to me with this earnings report, and then I can, for the couple grand or whatever they would realistically get for doing someone's end of year taxes, they can actually focus that on structuring and things that are going to save the customer a lot more money in the long run,
Yeah, that's good info, Craig, in terms of the, I guess, the attitude of the IRD at the moment, and that I think you're exactly right. From what I understand, they do understand the complexity involved here, and they know that obviously cryptocurrency, crypto assets, blockchain, it is a whole new industry. So in the same way that we are learning as they go, the IRD and different tax departments around the world are also learning as they go. But make no mistake, the taxman does want his or her cut. But so you talked about, I think you used the term a voluntary disclosure, right? Which is, I guess, disclosing your past activity. So just tell me exactly what you mean by that, and how does one, because I think a lot of people listening here, you said that not many people of those, 100,000 people, you said you didn't think that many of them have filed their crypto returns or their crypto trading history as part of their tax return. So if that is the case, there's going to be a lot of people listening to this that are in a position where they do need to make this voluntary disclosure. So just whatever you know about this process, how that would work, love to hear it.
Yeah, not a whole lot, unfortunately, because I've been submitting mine personally as I go. But yeah, effectively, from what I understand, you can calculate your position from previous years, and if you haven't filed that before, then there's an opportunity to file that with the IRD and pay whatever tax is owing or get whatever refund is owing and get everything up to square with the IRD. It's really important to go back and do this, because to calculate your current tax year correctly, you might have coins that you purchased from previous tax years that you're now selling. If the IRD doesn't have those things on record, you don't know what price that you purchased them at when we're trying to do the current year's calculation and things like this. So it's really important with crypto to start right at the beginning, because you have this inventory that moves forward, and you might not be buying and selling the crypto in the same tax year. You might have held it for multiple years. So yeah, getting up to date is really important. And, if you want to do anything in the real world with your money that you've made through cryptocurrency, like funding a business or buying a car or a house or whatever, like if there's money coming into your bank account, just like any other income, the IRD, the banks are going to see it. They're going to be asking, hey, where did this money come from? And if you haven't been declaring it, then you might end up in some hot water. So while there is this grace period to get everything kind of square, then I think it's really worthwhile everyone trying to get that sorted out. And the IRD has, started to become quite proactive about how they're finding out about who's doing what trading activity. They formally requested all of the customer records from all of the New Zealand exchanges, who legally had to provide them with the contact information of all their customers. And of course, the exchanges have to be up to date with their KYC and AML requirements. So, everyone's verified on there and blah, blah, blah. So, the IRD has everyone's name who has been trading on these platforms. And I would assume that if you're on that list and you haven't submitted cryptocurrency as part of your tax return by the end of the next filing period, they're probably going to start asking a few questions about what's going on.
Yeah, look, that's a great point as well, Craig, and I did mean to reference that, so I'm pleased you brought that up, because anyone who is a user or a customer of any of the New Zealand based exchanges such as Dasset, Easy Crypto, Kiwi Coin, probably one or two others, but those are the main ones. And even I don't know how it would work with Binance, whether they've sort of been served notice by the New Zealand government. But as you say, the exchanges that are based in New Zealand, the IRD, politely requested to those exchanges, and you will have received an email from the exchange saying that, hey, we've had a request from the IRD, and I think all the exchanges got legal advice, and they asked if there was any scenario where they could push back against this request from the IRD. But I think the consensus view was that no, there was not much of a pushback to be had, and that under New Zealand law, those exchanges were required to hand over essentially the KYC info that you use to set up an account with one of these exchanges. So it's a long-winded way of saying that, the chances are, if you have traded crypto in New Zealand, the IRD has your details. They potentially have the addresses of your blockchain wallets. And while you wouldn't imagine that the IRD here in New Zealand has unlimited resources in terms of being able to go after people, it's probably in your own self-interest to get this stuff sorted sooner rather than later, right, Craig?
Yeah, absolutely. And look, it's it's one of the main reasons why I built this platform, is that has been really difficult for people to understand this tax guidance, and it's so arduous to actually do the calculations and comply. I'm coming at it from a position that I really just don't want people to get unduly in trouble with the government for doing this stuff. And I'm really glad that I'm able to provide Taksoshi as a service to people to help them, avoid future drama for themselves. I would say it's definitely going to happen in terms of IRD knocking on people's doors. We saw it in the US, right? Like when the IRS, they subpoenaed Coinbase's records, and then everyone got a letter in the mail saying, we know that you're a Coinbase customer or a Kraken customer or whatever. You need to declare this as part of your tax. And I would be very not surprised if a similar thing is on the very near horizon for Kiwis in the space.
Yes, completely agree. And I just want to bring it back to something you mentioned earlier, Craig, in terms of, you talked about how difficult it is to get an accurate tax picture if you're only uploading partial information, right? Because then you don't know what the original price of a particular asset was bought at, and so on and so on. So to get the most accurate picture, am I right in thinking that what the user of your service should do, they need to get all of the information that they can from all of the exchanges that they've used across all the different time periods? For some people, this will go back a long way. Hopefully they're able to get all this information, and then they upload it all at once. So effectively, Taksoshi is able to, that's how you get the best picture, right? By having access to all that data over the full time period, right?
Yeah, absolutely. So if it's your first time going through and you're trying to catch up on previous years, the best thing to do is to extract the entire history, if you can, from beginning to end for each exchange, and upload it into the platform. And then we'll calculate which years, and we'll keep track of those trades across the tax years, and sort of link it all together. And we've got exchange rate data that goes back to like the beginning of crypto trading, basically. So we can deal with those old trades and figure out how much they were in New Zealand dollars at the time, and like all that kind of stuff. So that's kind of what the platform does. Now, of course, there's been crypto, especially before a few years ago, has been the wild west of places. So yes, it's likely that you simply don't have some of the information as well, right? Like the exchange, you might have been trading on some altcoin exchange that doesn't exist anymore, or didn't let you extract your trading history, or you've lost your login to your account, or you've lost the wallet that you were doing mining with, and you don't know what the address is, whatever, right? There's a whole bunch of reasons why you might not have all of the information. When you go through the Taksoshi wizard to generate your reports, we analyze the data, and if we see more sells than buys in a particular currency for a particular tax year, we'll flag that as saying, hey, look, from the data, we see that you've sold more than we can see that you've bought, so we need you to account for that. And there's a step in there where if we do detect a sort of mismatch in these balances, where you're able to put in a best effort average purchase price for those coins that we can't find in your trading history. So, you could go back and go, oh, well, I bought those Bitcoin in 2016. It was roughly, July or something, and just try and find an average price that they were in there and plug that in as the value. The IRD, again, has communicated to me that they're lenient in terms of these types of things. They know that it's going to be impossible to have all of your trading history if you've been in it for a long time. They're not going to, I would hope they're not going to be like throwing people in jail because an exchange in Russia went and did an exit scam, and that they don't have the data. It seems it's pretty far fetched, you know what I mean? So they're pretty reasonable with this, and going through this process, we have a few ways that you can sort of make sure that if there is holes in the data, you can patch it up. That reconciliation process in the wizard is one of them. The other one is we have a custom CSV format as well, where you can put in free-form purchases or sales, according to the template of the CSV. But that's how you can put in data that comes either from exchanges that you don't have access to, or simply just ones that we don't support yet either. But we are trying to add more more features. You know, we are a startup, so the feature set starts small, and we try and add them as we go. So we're always looking to add new exchanges and new features that help people to solve those common problems that they're seeing when they're trying to deal with the data that they have available.
Fantastic. And that's really good to hear that, the IRD, the point there is, you've just got to make your best effort to get all the data that you can and have it as accurate as you can and declare it. And I think if you do that, chances are you'll be okay from the IRD's point of view. Well, I think maybe we probably leave it there, Craig. We've covered most things. I think this has been a very useful discussion. Nothing else to say really, except I'll hand the microphone back to you and maybe just any closing thoughts and tell people where they can go to find you on Twitter or any other platforms you're on, and where they can go to learn more about Taksoshi.
Yeah, totally. So, I mean, the website is taksoshi.com. If you go there, you can try out the wizard process for free and check out how to use it. Got all the information on there about, how to extract your trading history and which exchanges we support and how to use the product. So just jump on there and just give it a try. You don't need to pay until the very last step where we generate the reports. So you can actually get started and just check it all out for free. You can follow us on Twitter. It's just @Taksoshi, and yeah, go and check it out and try and get your tax under control before the filing date, really. The end of the financial year is March 31st, and then the filing date for most people is the 7th of July. So everyone's still got a few months to even just sort out this last tax year that's just gone through. So yeah, check it out, give it a go, and put your best foot forward to try and get up to date.
Fantastic. Thanks very much, Craig. All the best, and bye for now.
Cool, thank you.
All right, everyone. Thank you for listening. Thank you to Craig. Don't forget, if you are a crypto trader here in New Zealand and you are ready to get your crypto tax sorted, as I mentioned, if you do decide to use Taksoshi, when you go to pay, you'll see there's a little prompt for a discount code. And if you enter the code A Brave New Coin, just as one word, all lowercase, you'll get 10% off. So yeah, that is pretty cool. Don't forget, if you did enjoy the show, please do subscribe to the Crypto Conversation in whatever podcast app you are using. You can get at me with feedback. Just drop me an email, andy@bravenewcoin.com. Yeah, but hey, that is us. We are out of here for today. This was the Crypto Conversation for Brave New Coin.